Okay, you are happy. Welcome to today's class. Today we are going to introduce public sector accounting and finance. And public sector accounting is one of the branches of traditional accounting. It deals with the accounting of the public sector, for example, the accounting of the federal, state, and local government, the accounting of the ministries, departments, and agencies, which shall further be called MDAs. So you should take note of that. So now, finance actually deals with how they secure money and how money is spent through policies and what are the objectives, that is macroeconomic objectives of Nigerian government. So these are what we are going to be discussing in this topic. But based on that, we shall shortly look at the definition of public sector. Aaron A. Adams defined public sector accounting as the process of recording, communicating, summarizing, analyzing, and interpreting government financial statements and statistics in aggregate and in details. It also said, in fact, in short, it is concerned with the receipt, custody, disbursement, and rendering of stewardship on public fund entrusted. Sorry for that type of error. Now, public finance is the study of the role of government in the economy. So when we talk about finance in this introduction, we are going to look at what role does government play in the economy. Government plays an important role and the private sector also play an important role. But our main focus of discourse shall be on government. So we'll be looking at the objectives of public sector. There are various objectives of public sector accounting. One, it's to ascertain the legitimacy of transactions and their compliance with the established norms, regulations, and status. That's the first objectives of public sector accounting. Now, aside these objectives, we shall also be looking at the second one, which is providing evidence of stewardship. Providing evidence of stewardship. Providing evidence of stewardship. Providing evidence of stewardship. The next one is assisting in planning and control. The next one also is assisting objectives and timely reporting, providing the basis for making decision. Now that is that for objectives of public sector accounting. So we'll move down to next subtopic, which is users of public sector accounting. The users of public sector accounting are, we have internal, there are two, internal users and external users. You can see it here. Internal users, this group is made up of the executive government, so which is the president, the governors, and the chairman, the federal ministries, the state commissioners, the top administrators of government, and all that. The organized labor union in public sector, the external users, and all that. So another set of users are the organized labor union, the chief executive officer, the external users. So you can see it, the executive government, and you know the executives such as president, governors, and chairmen. The next one is the federal ministers and state commissioners, top administrators of government, and all that, the chief executive officers of government, the organized labor union, the external users. This group is made up of the National Assembly, you know what that is, members of the public, government apart from the one that is rendering account, foreign countries such as Cameroon, foreign financial institutions such as IMF, World Bank, UNICEF, creditors both local and foreign governments, researchers and all that, political parties. So these are external users. So you must know the examples of external users. You must know the examples of internal users. So we'll be looking at the constitutional regulatory framework of public sector. What are the laws that regulate public sector accounting? That is what we are going to be looking at. The first one is Nigerian Constitution. You understand? The second one is Audit Ordinance of 1956. The third one is Finance Control and Management Act 1958. Financial regulations. These are in the notes. You can read them up. Financial or Treasury Circulars. Public Procurement Act 2007. Fiscal Responsibility Act 2007, other laws guiding public sector accounting and finance, and all that. We'll continue concepts and principles applicable to public sector accounting and finance. You as an accounting graduate or AAT holder or someone whom have written foundation would understand concepts and principles of accounting. Now, these are the concepts that I listed here. Consistency, you know that. Materiality, you know that. If you have forgotten their meaning, go back and read them. Periodicity, duality, entity, historical cost, and going concern. No one will ask you the concept of accounting in the exam, so note that. The basis of public sector accounting, this one comes out often. So there are 5 bases of public sector accounting: cash basis, accrual basis, commitment basis, modified cash basis, and modified accrual basis. Under cash basis accounting, revenue and expenses are recorded when cash is received and paid. Advantages: it is simple to understand. It eliminates debtors and creditors. There is no debtors, there is no creditors. It permits easy identification of those that authorize the transaction. It saves time and it is easy to operate. Even non-accountants have better understanding about it. Disadvantages of cash basis: it takes unrealistic view of financial transactions. It does not provide for depreciation of fixed assets. It does not present accurate picture of the financial affairs of the government. Now, what is modified cash basis? Modified cash basis is saying, please keep the accounting books open continuously for extra 3 months after the end of the financial year. For example, if the financial year ended 31st December 2019, they modify the saying, close the accounting books 3 months after December, which means you should close the accounting books on 31st March. Thank you. So move down to accrual basis. Accrual basis is saying, recognize revenue and expenses when they are earned and incurred, not when cash is paid. The private sector and recently Nigerian government have adopted accrual basis of accounting. Good. Advantages: it takes a realistic view of the financial transaction. It represents the true or accurate states of affairs of the entity. It could be used for economic and investment decisions and many others. You can read that up. So we have disadvantages. It is very difficult to understand by non-accountants. It does not permit delegation of work. Now we'll now look at modify accrual basis. Modify is saying revenue should be recorded when received, not when earned, and expenditure are recorded when incurred. Here, cash basis is used for to record revenue, and accrual basis is used to record the expenditure. That is what modify is saying. So note that it's in your notes. You can always come back to listen to this class again. Then we'll now look at commitment basis. Commitment basis of accounting is saying expenditure should be recorded when it is anticipated that we will incur it. That is what commitment is saying. You understand? Now, you read up comparison between government accounting and private sector accounting. You read that up, is in the notes that I have uploaded on the group chat. And in our next class, we'll look at fund accounting. Okay, let's quickly look at fund accounting. It's simple. Fund accounting is the fundamental principles underlying government accounting, to enhance stewardship. Fund accounting was defined, you understand? Fund accounting was defined as a separate fiscal and accounting entity in which resources are held, governed by special regulations, separate from other funds and established for a specific purpose. Classification of fund. Fund can be classified majorly into three. We have government fund, proprietary fund, and fiduciary fund. I will explain them. Government fund. These are funds that are used to hold resources derived from taxes, fees collected for the government. Proprietary fund. These are funds used to hold resources derived from from government business activities. For example, parastatals. Fiduciary fund. These are funds that are used to hold resources in trust on behalf of third parties, like for example, pension trust fund. Types of fund, we have consolidated revenue fund, development fund, contingency fund, special fund, and there are many. Now, this type of fund is what we are going to be discussing throughout public sector accounting. So I will always refer you back to this. So on this note, we'll say welcome to today's class. So we'll be ending it here. See you guys next class on PSC.